Hello everyone, myself Vaibhav. In today's session of Visual JForex, we are going to explore the use of an very interesting indicator named Directional Movement Index, the DX. Earlier, we had seen ADX, and that was the average directional movement index, and this is the pure reading the directional movement index, and we will see how we can use these indicators to our advantage to build the automated trading setup on the Visual JForex board so that we can run these algorithms on our account and stay in profit. So our main purpose is to find the positive setup which will bring us the profit and also ease our burden of trading day in day out while sitting in front of the system, the screen, the price moves. So here this is part of the momentum indicator, and we don't really have much of a description given here. We will straightly head to this Visual JForex board developed by the Dukascopy Bank SA. Let us add the DX indicator. Here comes the DX indicator block. We can use any of the three start points. In today's session, we will go with the on tick. We had seen the peculiarities, the differences of all these on tick points. So depending on your requirements, you have to choose any particular start point. Now coming to the indicator block, we have to define these four input parameters depending on which we will have the output. So to fill in these values to figure out what is the combination which is likely to best serve our purpose, we will have to do some analysis observations on the chart to see what kind of setup can generate profit for us. So depending on that and then extensive testing, we can come to reasonable conclusion what is likely to prove profitable and what is not. So here this is the DX chart plotted on the Euro USD on the hourly time frame. Let me explain to you the workings of the DX first. We consider these DX values. We will also keep in mind the formula for it. So basically this DX indicator is made up of the difference between positive directional indicator and negative directional indicator. We take the ratio of the difference. We subtract this second negative directional indicator from the positive directional indicator, and then we divide the difference by the sum of these two values and multiply it by 100. So we get the value, the ratio you can say, which will range from 0 to 100, and in popular parlance as per also its developer, the value below 25 is indicative of the fact that there is not much of a price move, and the underlying instrument is trading sideways, and whenever the value rises above 25, that means the momentum is gaining pace, and the volatility is there and prices are likely to move, and this indicator is not really used as a trend finding indicator. You don't really get the idea on which side the price action is moving or likely to move. We simply use this indicator to determine the trend of the strength of the trend, and depending on how strong the underlying trend is, we can decide to go in for fresh trading opportunities. So that's how we use this indicator, and as I said, the ADX value and the DX value differ from only the standpoint of averaging. The DX value is the difference between the positive directional indicator and the negative directional indicator for that point in time. So all these individual values you can see vary sharply from one point in time to another point in time. In case of ADX, we take the averaging of the DX values, and because of that it's a lot more smoother, but because of the averaging the time lag is there. When we see sharp moves the ADX is not really able to capture those sharp moves early on. And in case of DX, the DX is rather sharp, and as soon as the price moves sharply, we see it being reflected in the DX value. As you can see from this example itself, the DX value has jumped sharply about 25 in just matter of hours, 1 or 2 hours here. But in case of ADX, it would have taken a lot longer. But also, because of this volatility, we see sharp fluctuations in value, and because of that, we also have to be mindful of the price movements trend. So for that purpose, we have to use different kind of indicators which will give us the idea of the trend of the underlying instrument, and then we can use the DX indicator in conjunction with that to determine the strength of the trend and then trade accordingly whenever we see volatility rising, and we see that now is the time to get involved as the prices are likely to move sharply on the side of the trend. So in such a scenario, we can rely on the DX indicator to get us an entry at the opportune time, and that's one of the advantage of the DX over the ADX. But of course, both of these indicators serve their own purpose and work a bit differently. And here now we will focus on the input parameters which need to be defined to get the output value, which will help us in determining the figuring out the optimum entry and exit point. So first thing first, we have to define the instrument on which we want to build the algorithm, and here the list is provided. You can take any of the instrument which are supported on the Visual JForex board. So we have this listing provided here, and depending on your requirement, you can work with any of the indicator. So for example, try to take let us take gold. We have seen currency instruments so far. Let's try gold this time, which is a commodity bullion. The time period depends on what time frame you want to trade on. If you want to trade on the longer time frame, then I think the time frames like 4 hourly, daily, or even weekly will serve your purpose. If you want to trade morely from the short term perspective, from scalping kind of trades, then the lower time frames like these 10 minutes or 15 minutes, this kind of time frames will act better. For this session, let us take the time frame of hourly. Hourly is one of my favorite time frame to trade on. It's fairly convenient as well. So let's change this chart to the XAU in terms of USD, that is gold. Here comes the gold, and now we have to see these DX values fluctuating between below 25 to about 25, and as I said, whenever there is not much of a price action, we see values dipping below 25, and as soon as the momentum kicks in, we see these DX values jumping sharply above 25. So that's how these indicators work, and we can get entry early on whenever there is a strong move happening in the either direction. So that way we can use this indicator to our advantage to get the early mover advantage, you can say, and get involved for the fresh moves which might go on for quite a while, or which might even turn just after the initial move. So it can go both way, but we will have the clarity emerging pretty soon. If again the momentum drops, we see that DX again gives up on the gains, and it is kind of turbulent and not consistent or constant over time. We see this value fluctuating all the time, but that's the utility of it as well. Now let us consider the third input parameter, the loopback grid. Depending on how you want to design your algorithmic setup, you have to take into account the loopback grid. If you want the current value, then the shift should be at 0. If you want to go back in time and fetch earlier values and then do the comparison with maybe the current value or the another value of another point in time, then you have to take the shift values accordingly. If I keep it as it is 0, then the current value will be taken for output. If I change it in any way, then by that much amount in time we will be going back on the chart and fetching the value. Time period is the parameter on which the calculation will be done. So here, when I take this dx value, the time period which has been taken into consideration is last 14 candles of 1 hour each. So that's how this input parameter works. And if we change it, suppose if we edit this, then you will have slight differences in the values. So now I have changed it to 21 and you have this dx value, which is lot more smoother compared to what we were seeing when we were using the 14 value. So you have to see what kind of which time frame, which time period you want to work with, and then I think you will have the proper setup. And of course testing will also give you an idea of what works and what doesn't work. So whenever we build any fresh setup, we also carry out extensive testing just to gain the perspective and insight into how profitable the setup is likely to prove. So here, after defining all these input parameters, we get the output value, which then can be utilized to do the comparison or simply for defining the if-else statement to put in the conditions which will then determine the course of our trading system. Coming to the settings, the value for calculation of the dx can be on the either side, bid or ask. So depending on what side you prefer, you can take the offer side. Applied price is the price of the candlestick which is going to be used for the calculation of this indicator. If you want to work with the close price, then the output value for the dx indicator will be calculated using the close price. If you use any other option like open price, high price, low price, then the calculation will be done accordingly. So let us here also we try changing. We don't really have the editing option here, but we have a lot more options on the Visual JForex board, so that's always better and one of the advantage also instead of trading manually. So that's it from my side for today's session. I hope you have been able to understand the functioning of the DX indicator and you will be able to use it on your own to build the profitable trading setup using this platform provided by the Dukascopy Bank SA. Thank you all for joining in. See you tomorrow. Goodbye.